Good morning, everyone. Hello, welcome. I'm very pleased to be here. This session is Cambridge University, but it's also KPMG. My name is Warren Mead, and I lead Fintech for KPMG globally. And I'm delighted to be here and joined by Bob, and we've been working very closely together on a series of studies. Bob, why don't you tell us more about those?
Yeah, so I'm the Executive Director at Cambridge Center for Alternative Finance. Many of you, if you're operating platforms, have been assailed by our emails looking for data over the past 12 months, so the name may not be new. But essentially, this is a research center that was set up at Cambridge about a year and a half ago. We've done a series so far of 9 studies, really looking at the evolution of the online alternative finance market around the world. And that covers both financial channels as well as non-financial channels. We're as interested, actually, in understanding what's going on in reward-based and peer-to-peer funding channels, because at the end of the day, they are a leading indicator of how regulation might move and how adoption of financing channels will evolve in different economies. So who's controlling slides here?
Yeah, the clicker's over there.
Aha. So we have 3 areas of research that we do. The first area of research is around the evolution and development of online channels. We've done 8 studies so far, I think I mentioned. We've got a 9th coming out in the next 30 days on the area of the Middle East and Africa. And this is just for 2015. We did 5 major studies that by the time we publish the Middle East and Africa report, we'll have collected data, very detailed data, from about between 12 and 1,300 platforms. Covers 92 countries. We have 7 university collaborators. And between interns and faculty and other researchers, about 80 researchers were involved in this activity this year. So this will give you some idea of the distribution of platforms around the world. And really what we see, I think, is some sort of high-level comments here is very significant volume growth on a global basis. Now, you've had some data presented today that shows peer-to-peer lending or marketplace lending specifically, quarter by quarter, slowing volume in 2016. Our numbers are actually pretty aggressive on growth because, remember, we're capturing not just the lending channels, but in some countries, you have dramatic growth in non-financial channels coming from a very small base. So in aggregate, our numbers probably look a little stronger in terms of those multi-channel financing activity going on rather than just peer-to-peer lending. But I think what I'd highlight is China. The growth in China was extraordinary year on year, and that's an accelerating growth pattern with well over 100 billion. The second would be the United States at 36 billion, then the UK just shy of 5 billion, and then you get into, frankly, a big break past those big 3 into very small volume numbers. But what I would say, the story is pretty consistent across the world. 85 to 90% of this volume is a lending story. This is really, when you talk about the whole area of alternative finance, it's primarily about debt and it's about credit. What's interesting in the regulatory front is a lot of regulators and policymakers look at implementing regulation assuming sort of equity crowdfunding is kind of the frame of reference, and yet that is by far the lesser activity relative to debt across these markets. And when we take a look at volume per capita, you see also some interesting patterns. So the previous slide was total volumes. This is the per capita volume number. And what you see here is, although the story on total volume of China of over 100 billion, on a per capita basis, it's still less than the United States. The United States dominates the global picture, and you begin to see once you get past the UK, China, New Zealand, a relatively small market, personal lending dominated. What you begin to see as you get into the smaller markets, the composition of these different kinds of funding making up the alternative channel volumes, again, varies quite significantly. But there's something interesting when you look at these 10 countries. If you were to pick 10 countries around the world, and what I would describe as their reputation for innovation, many of these 10 would be in it. And so I think what we see when we look at this sort of correlation to GDP, growth of alternative lending very highly correlated to GDP growth highly correlated to innovation, So you see this triangle of innovation, GDP growth, and alternative lending volume. And these are the major sectors. This is primarily around SME lending, okay? And I would say that SME lending is the dominant form, actually in very few markets. I'm looking at Tanya, who ran the research. Really, consumer lending tends to dominate across the markets. When you look at SME lending, you see different proportions begin to appear in relative sense. So in China, SME lending is much more important relative to, say, the US market, which is very dominated by consumer lending. And then you've got the UK market. The splits are probably somewhere in between. And when we see SME lending, you see manufacturing tends to dominate because you tend to see more secured lending, again, dominated by manufacturing. And I think with Warren, I'm going to pass it over to you at this point to cover some more slides.
Thank you. Excellent. Thanks, Bob. Yeah, obviously a huge industry around the world. Over 40 billion people have invested money or donated money through these platforms around the world, and over 10 million have raised money. If you're thinking the numbers look a little odd, it's because obviously one investor will invest in many, many, many loans through the platforms. So a big global industry. And when you cut through what do these people look like that are investing or borrowing or fundraisers, predominantly across the world, this is still an industry which is dominated by men, both on the lending and the borrowing side. There is one exception to that, which is in terms of charitable or donation-based giving, where women across the world are more generous and raise more money and give more money to charity through the platforms. So I don't know what that says about the character of men versus women, but I think it's an interesting statistic anyway. In terms of the source of funding for the platforms, in the US, that's where you see most of the institutional funding, albeit the UK is significantly increasing in that area as well. I think if you look at the trends over a few years, at the start of the kind of movement of crowdfunding or marketplace lending, people were, this concept of finance by the people for the people, so there was a huge amount of proper peer-to-peer lending. And then over the last couple of years, people have realized, they can trade some of that off for rapid growth by using institutional funding. But I think we're moving to a space now of much more balance, of looking for diversity of funding, whether that's from institutions, through securitizations, as we just heard, and other methods as well.
Yeah, just to add one point about this. In the UK market, for example, in 2015, there was some institutional investment on about 44% of the platforms. And about 25 to 30% of crowdfunding and loan-to-own volumes, very small in the equity crowdfunding space, was actually founded by institutional investors. That number has roughly tripled over the past 3 years. So we're seeing an absolute, as Warren pointed out, quite a dramatic shift, and by the way, across all regions. At this point, certainly the China market, very light institutional involvement, but again, very rapid growth of institutional participation. Frankly, as data becomes and analytics become more sophisticated in some of those markets.
In terms of cross-border funding, the message here, it's a slightly confusing diagram, but broadly, Europe dominates cross-border funding. And what's broadly happening is money is flowing out of the UK and into France, Italy, and Germany. What happens post-Brexit? What happens when we continue this kind of cycle of nationalization, which we're seeing in many countries around the world, remains to be seen. But I think there's some big challenges for cross-border flows, not least the patchwork of regulation that we have. Yeah,
I think also in Asia, just to kind of go one level up geographically, we're starting to see also a growth in cross-border funding. You're starting to see, for example, investors in Japan or very low return, investment return countries looking and targeting platforms that are in Cambodia, for example, areas where Chinese tourists, or Japanese tourists, or tourists from other countries would have some familiarity traveling around the region. They're culturally comfortable, and they're seeing an arbitrage between the savings rate in a destination country, the savings rate in their country, and they're seeking higher returns. We're starting to see that increase. So I think this cross-border trend is something we're going to see grow quite significantly, particularly in the Asian region in the next 12 or 24 months.
Touching on that point about regulation, we asked the platforms, what do you think about the regulation in your country? Is it excessive, appropriate, or do you not have any regulation, or it's not sufficient? What you can see here is a general satisfaction with the level of regulation around Europe, at least from the platform's perspective. Some of the emerging countries saying they need more regulation, or at least some regulation in their countries, and a few there that say, hang on, this is stifling the growth of our industry. But very much a patchwork of regulation, which makes cross-border strategies really quite tricky for the platforms that are looking to do that. So let's navel gaze. Let's talk about what we think might happen going forward. First and foremost, this challenge of maintaining the growth rates. Remarkable growth rates in 2015. We've seen some evidence in some markets of that slowing down a little in 2016. And fundamentally, the thing that's really, really hard is getting distribution. And in a sense, there's been a wave of early adopters, if you like, people that have been kind of fed up with the service or whatever they're getting from banks, and they're early adopting. But we're getting beyond the early adopters and moving into the mainstream. And if you look at other industries that have tried to grow through this phase, particularly in a B2C model, it's tens of millions of pounds or dollars that you need to start spending on distribution and marketing. And I guess there's a question about, is the industry up for that?
Now, I would say that the big challenge, like my personal interest is really focused around SME lending. I have a lot of sort of practical experience in that. And so that's what I really enjoy researching. And I would say that if you're in the SME lending space, I would bet that over the medium term, now it varies to some extent in the short term, but in the medium term, your biggest challenge is attracting good borrowers to your platform. It's not your supply of capital. We have so much inbound interest in our center from very, very, very large institutional investors. And by very large, I mean managing assets between, in some cases, 500 billion to $1 trillion, that believe this is an investable asset class. It's not big enough yet. There's been some comments earlier about the packaging of product that isn't quite right yet. I think that's what I hear as well. But the money will show up if the risk-adjusted returns are compelling. And that will be driven by attracting good borrowers. And good borrowers in SME space have to be comfortable trusting the switch, high switching cost for an existing bank lender. So I see that actually at a more granular level in the SME space as what that challenge is really about. Go ahead, Warren.
Thanks. So this balance of finding the right level of institutional and retail investors, we touched on that before. And I think we heard some of that from Lord Turner as well. I think there's going to be more diverse sources of funding going forward, and managing that's going to be really tough. But the thing I really want to touch on is this managing the risk of fraud, because I think this is a major challenge on two levels. Firstly, the risk of fraud at the platforms themselves, and secondly, the risk of fraud by the borrowers, okay, and accepting bad credits. So at the platforms themselves, I mean, we have seen in China very, very significant alleged frauds, billions of dollars of investor money lost. And I think managing that risk of fraud, and particularly a point Bob's going to talk about, pooled reputation, is a real challenge.
Yeah, it's very closely linked. I think one of the biggest challenges that, let's say, good platforms have, right? Good platforms. So you've got good operations, you've got good credit processes. The problem is your reputation is pooled with platforms that have bad processes and bad credit risk. They benefit from the pooled reputation issue. You are at risk. So if the bottom quartile, in terms of processes, performs poorly, it will impact the top quartile. Now, there are things you can do about that, right? Just as a practical matter. You got to granularize that reputation pool so people think about ZOPA, not X, or funding circle, not Y, assuming that those two named firms are, in fact, good portfolios. But that's what you have to do. So to give you an example of how you actually execute that, we partner with Experian, which is the major provider of SME data in this country, as well as scoring algorithms or credit scoring model, to all SME lenders in the UK. And some of the SME lending platforms provided their entire loan book to Experian along with the names of the borrowers, because we can't look at the names of the borrowers for data protection reasons. Experian matches that name within the total pool of UK SMEs borrowing from banks and scores them all. And then we separate the pool again so we can see what really is the quality of the SME channel borrowers versus the bank borrower channels in the UK on an apples and apples basis. Now, if you think about it, and I'll say the early data would suggest, actually, the data looks pretty good. In other words, it doesn't look like the peer-to-peer channel is attracting the garbage the banks don't want. That's a key question in the minds of investors. It's also a key question in the mind of borrowers, because I don't want to necessarily switch from a bank and use a channel that would label me as a garbage business, right? So if I'm named as being in the pool as a platform and the data on the credit tranching of that pool looks at quite attractive perhaps relative to banks and the bank borrowing pool, all of a sudden if there's a platform that has a problem but they're not in that pool, I now have an argument to differentiate my platform and our processes from what happened in that platform. So there are really actionable steps that platforms can take to actually create and distinguish their own direct reputation, which I think is going to be very important going forward to insulate business risk.
That's right, Bob. And if you think about the investment management industry, there is a very developed and sophisticated system of rating. And it's very clear that certain fund managers differentiate based on performance. We've seen some of that in our industry, but really it's at a very emerging or early stage. And I think that's a really important part of the whole ecosystem to provide investor confidence. We've got 49 seconds left. Let's go to regulation. Yeah, absolutely. You can pick up regulation.
Look, I think regulation, so there's this is phrased as changes to regulation and policy in the sense of challenges ahead. It's also opportunity, right? Now, so I'll say, first of all, that my comments on policy and regulation are nothing to do. I think Chris Woolard mentioned yesterday that we're collaborating our research center with the FCA on data collection, analysis, and providing that analysis as part of the regulatory review that the FCA is undertaking right now. Right? That's quite a unique collaboration, and it's part of a long-term collaboration, actually. But I think when I look around the world, I think I see a lot of regulators that are starved for information, and they're all trying to balance this: how do I stimulate innovation? How do I drive GDP? But how do I protect investors? And they can't do any, if they don't have good data, they sit on their hands. They won't enable that to happen. And so really our centers, we're just a platform, right? We're a platform for platforms to provide your data, and with the help of Peter, right, Renton, and the Lend Academy, a ton of collaborators in the industry. If we have your data, we can give visibility to what's going on in the industry and help drive evidence-based regulation. So I guess this is my closing pitch for saying we're going to do 6 more studies in 2016 of every region again. Please give us your data, please cooperate, and I think that we can help address this challenge on the regulatory environment.
Thank you. I think we're out of time, but if you'd like a copy of the report, they'll be just outside the door as you leave the room. So thank you very much.